Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday video is for Thursday, July 12th, 2012. It's around 2:30 p.m. Eastern Time. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. All right, let's talk some action here. Great action today, folks. The market's gapping down on more fears out of Europe and Chinese economic data. The market again gapped down. Notice where you gapped down to. You gapped right to that pivot low, and once that low broke this morning, you had a nice flush. The market flushes down, comes down into major support right here, and then turns around. Notice the turn occurs around 10:30 a.m. just as volume begins to get lighter. Sure enough, volume lighter means upside more probable. That's exactly what happens. The markets start to float up and have really floated up a majority of the day, getting a little choppy here, but this is actually bullish choppy right now as long as you stay above the two moving averages, all right? That's very important to understand. So they've recaptured the two moving averages and now chopping just above that range. And again, this leaves it open. As long as you don't close back below both moving averages, meaning below the 20 at this point, you have to think that the market has a chance to go higher into gap fill. Gap fill will be right here. You got close to it before, but not quite there. And then this is your next big level right up here. I mean, this here, gap fill, and this pivot right up here are your two big levels. And then you have your 200 MA just above it. On the downside, just remember, folks, as long as you stay above the 20 MA here and the 50, that's fine. If you get it on a 10-minute candle closing level below, then all bets are off and you could sink all the way back down. So again, those are their pivot points to watch to understand where this market will head this afternoon. Great trading day today, though. I have to tell you, in the intraday stock chat just this morning in the first 30 minutes, there were probably 5 to 10 trades out there. Some of them, again, AXP, man, I could go on and on. Apple was a good one. There were many, many trades this morning. Beautiful gap fills on the flush today, and they were all good pickups for great profits, all right? For me, it's a little over 4,000 profit for the day on my trades, and that's very nice on a Thursday. I'll take that any day of the week. Looking at some other keys here, let's take a look at one of the stocks I called out. And I gave this one out to the research center, folks, but I'm going to show you guys exactly how awesome it is. This is JCPenney's chart. Wall Street hates it. When Wall Street hates it, I start to love it. Why? Why is JCPenney a great buy down here? First of all, you have a little bottoming tail, which is just the sweetest thing ever. But I knew it was a buy even when it didn't have a bottoming tail because the pivot low from 2010, draw a trend line right across. Is that sweet or what? I mean, those type of things literally, I love trading. Yeah, there's nothing else to say. I mean, these type of things, you can make money so easily in the market that it's just like, okay, you want to hand me a few $1,000? Sure, I'll take it. What am I going to say, no? So that's the beauty of it here, folks. I mean, I love that. I mean, that's just a beautiful double bottom. Just to give you an idea, that's a beautiful long swing trade, in my opinion. Any sort of retrace can be bought down to the 1940, 1950 level, and upside could easily be back to about 21.5 on the upside. All right, taking a look at some of the key stocks here. Let's take a look at JPM. Now, JP Morgan was up the last few days. It is down today. Remember, JP Morgan has earnings tomorrow morning before the market opens. So really, there's no I don't trade earnings. I don't buy something before earnings. I don't sell something before earnings or short it. It's just not worth it to me. But one thing I will say about JPM is the chart is very bearish here. All right. Bear flag right here, 2 moving averages or 3 moving averages above. I still won't trade it because there's, basically the reason why you don't trade earnings is because there's no way you can get an 80 to 90% success rate trade ahead of earnings. Basically when you go into earnings, you're going to have maybe 60-40 at best, which is still, you can still have them in your favor, but it's not good enough because if you're wrong and earnings gap one way or the other, you lose a huge amount. You don't have a choice because it's after hours or it's pre-market. So I just stay away from earnings. But bottom line is you can still speculate, and I would speculate based on this pattern. You'd probably think it could go down on earnings. Goldman Sachs, let's take a look. Down $1 today. Goldman not looking that great. You had a nice pullback, and now you're consolidating sideways. You could still be headed down to this low pivot. All right, this low pivot there. And that's something to note. Now, going back to the SPY, we'll check out a couple other... In fact, let's go to Apple first. Let's take a look at Apple here. One thing on Apple I want you guys to note here is the reason why. And this was a day trade I gave to the chat room today, so I want to go over it, obviously. But if you look at this level, I mean, how did I know this level? Before, when Apple was trading up here, I said, guys, I want you to look at the 592.50 to 593 area, which is right down here. And how did I know that? I mean, how do I know this type of thing? Well, I'm going to show you right now, folks. All you need to do is zoom out. All right, zoom out. And what do you see here? This is a gap fill right here. There's a gap from this day to this day. You take the gap fill level right here, draw a trend line across. Bam! Look at that. I mean, I just love charts. I mean, as I said before. I mean, it's if you know the PPT methodology, and that's the PPT, not plunge protection team, although it's basically as powerful as that. The PPT stands for price, pattern, and time methodology. If you know that, you make money. It's as if you have a printing press. Wouldn't we all like to have a tree, a money tree in the backyard, or a printing press? It's the same thing in my opinion. And look at the bounce. I mean, you got a bottoming tail, and look at the move on Apple. I mean, you literally went from 592.5 all the way to over 600. Basically a $10 move off the lows on Apple. Awesome. Let's go back to the SPY before I finish this video up. And again, folks, the volume is relatively light, but I think the big thing here is when you're looking at the charts, the market keeps trying to break down and it keeps getting rescued. Whether it's rumors about QE3 or if it's this or that or out of Europe, who knows. But the markets still try to get rescued and they've been successful. The big thing to watch is right here. See this line? This pivot low connected through. Notice how you've hit it the last few days. Today you gapped below it and they're now trying to recapture it. If they recapture this, the bias is to the short-term upside. If you close below the blue line, your bias is to the downside. It's that simple. Okay? Alrighty, guys. Have a great afternoon. Come join the research center at InTheMoneyStocks.com. That's for swing traders and investors. The intraday stock chat is for day traders. 7-day free trial. You can't go wrong. You know, it's free. Free is for me. Plus, you probably make a ton of money by following us and learning our methodology. And, you know, you'll make money for life when you learn the methodology and become a full-fledged member. It's a beautiful thing. I encourage you to take at least a free trial. Try it out. Have a wonderful, wonderful evening. I'm going to go back and make some more money today. Take care.